Are you guys seeing what I'm seeing? This is insane. It's currently about 10:45 a.m. on the East Coast. We got the February CPI data this morning, and the stock market is absolutely exploding. We have the Russell up over 3%, the Nasdaq's up over 2%. We have the S&P almost up 2% as the Dow is up 1.3%. And get ready for this, guys. The VIX is down over 15%. Yeah, we got a lot to break down this video. We're going to go over the CPI report. We're going to break down the data. We're going to break down some charts and stocks I'm looking at. So if you all find value, hit the like button. Make sure to subscribe. And if you guys want some free stocks, who doesn't like free money, use that Moomoo link down below. And once you open up an account, you get 1 free share of stock. If you deposit at least $100, you get another 6 free shares of stock. And if you deposit at least $1,000, you get another 10 free shares of stock, totaling 17 free stocks from Moomoo. So if you want some free money, you also want to help out the channel, use that Moomoo link down below. And with that being said, let's dive into the video. Starting off here with the markets very quickly, let's take a look at what's going on, and then we'll talk about the CPI data. We'll break down the report. So we can see the Russell's up over 3%, leading the way today, leading the green, and it's almost back to 1,800 points. You guys can see here the Russell just about a week and a half ago was well over 1,900. Then when everything with SVB, the regional banks, started to play out, this ended up taking a beating. This index took a beating from 1,900 all the way down to roughly 1,720. That was a loss of over 10% in the span of just about a week. And now it seems like we're seeing a bit of a relief rally. We hit 1,720. Now we're pushing 1,800. Heck, we might even go over 1,800 while I'm making this video. But don't get too excited because the bulls are nowhere to be found still. Sure, the bulls are doing well today, but in the grand scheme of things, on the 5-day, 5-minute, you guys see that here on the 10-day, and on the 20-day, the bulls, or rather the bears, are still in charge. You guys see that here, and really all this is today is a dead cat bounce after we got pretty good numbers for CPI, which we'll talk about here in a couple of minutes. So don't get too excited yet. This is great, the fact that we're seeing an awesome green day today, but really, by the looks of it, it is just a dead cat bounce. And I could say the same exact thing here on SPY. If I pull SPY up, you guys can see it got down to about 380 yesterday. This morning it was at 386. Now it's rallying above $390, but still it is well within the downtrend here on the 20-day chart. You guys see that. And on the 5-day, 10-day, you name it, the bears are still in charge. That's pretty obvious, at least to me. And of course, I'd love to know your thoughts down below in the comments. Same thing here with Triple Q, which you guys know tracks the Nasdaq. Well, I guess one good thing here for the bulls is they're breaking out of the highs from yesterday and the trading day before, and that's on the 5-day, 5-minute. But if you pop up the 20-day chart, lo and behold, we're still in a downtrend. The bears are still in charge. At least that's what I'm seeing. And sure, if Triple Q could start breaking out of 300, 305, 310, that would be grounds for a reversal, but we're not there yet. If SPY could start breaking above, let's say this starts going past 400, 405, 410, that would be grounds for a reversal, but we're not there quite yet. In fact, we're not showing any signs of a full breakout right now. As of now, sure, when you're watching this, it could be different, but I'm talking about as of now. So let me actually shift over here to the CPI data, then we'll break down exactly what's going on. We'll look at the categories and do all that fun stuff like we do every month when the CPI data comes out. So check this out, guys. The CPI, the Consumer Price Index for all urban consumers, rose 0.4% in February on a seasonally adjusted basis after increasing, you guys remember this, 0.5% in January. And over the last 12 months, the all items index increased 6% before seasonal adjustment. And if you guys watched my videos recently, and if you were paying attention to the estimates, these came in, the numbers came in right in line with the estimates. We were expecting a 0.4% on the monthly number and a 6% on the annual number. That's what came in on the CPI data. And last month, it was 6.4% annualized. Now it dropped to 6%. Looks like the Fed's doing a decent job here, guys, at bringing down inflation. But the reality is it's still fairly high. And I don't want to say it's still being very stubborn, but there's still a ways to go down. And, it's pretty obvious. Their goal is 2%. We're at 6%. We got to fill that gap somehow, guys, and time will tell how that happens, when that will happen, and if that will even happen. And this chart right here shows you guys, this is the 1 month percent change in CPI for all urban consumers. This shows you how it's been doing pretty much over the last year. You can see back in February, March, April of last year, it was going crazy. You guys know that inflation was hot back then. We can see in February of 22, it was 0.7. In March, it was 1%. It was 1.2% in June after a 0.9% in May. And now it's come down a good amount. You guys can see the past couple of months, the inflation's a lot lower than what it was during that last, the beginning of last year when we got the Russia-Ukraine war pop off. That ended up happening in February, March. You guys can see then the months after that, again, May, June, the inflation was super high. So it's good to see the monthly numbers down, and it's also good to see the 12-month percent change in CPI. This is trending down. That's a very, very good sign. But again, we're still well above, the historical average, at least the average from recent history, which has been, for inflation, 2%, 2.5%, that in that ballpark. We're still well above that point. And coming down a little bit more here, this shows the different categories. We're talking food, energy, we're talking energy services, new vehicles, used vehicles, stuff like that. And a lot of these categories, we're seeing a decline month over month. Let's break down some of these very quickly before we do wrap up the CPI report, that is, and talk about some more stocks. So bear with me here, guys. We see the all items again, that decrease from 0.5 to 0.4 month over month. That's 6% annualized. And then under that, we have food at home, and food away from home. So in general, food has come down from 0.5 in January to 0.4 in February. That's 9.5% annualized. Let's see here. Food at home also came down from 0.4 in January to 0.3 in February. That's 10.2% annualized. It looks like food away from home ended up staying the same, flat essentially, 0.6 in January, 0.6 in February. That's 8.4% annualized. And we have energy that decreased by a good amount, 2%. It was up 2% in January. It came in minus 0.6% in February. That's 5.2% annualized for energy as a whole. Then we have fuel oil making the most substantial drop out of all the subcategories here. Fuel oil ended up going from negative 1.2% in January to minus 7.9% in February, but it's still up 9.2% annualized. So that's a good sign. The fact that it is coming down a good chunk there month over month, and year over year it's coming down a good amount there. And we have energy services coming down as a whole. That was at 2.1% in January. It came in minus 1.7 in February. That's 13.3% annualized. If we come down a little bit more here, let's see the new vehicles and used cars and trucks. New vehicles was 0.2% in January. It was 0.2% in February, so unchanged. That is 5.8% on the unadjusted last 12 months. And we have used cars and trucks. Look at that, guys. This has been decreasing pretty much every month in recent history. It decreased again in February, minus 2.8%, and in January, it was minus 1.9%. So that has come down a good amount. It's actually minus 13%. Almost 14% in the last 12 months, which is very good. We have apparel pretty much unchanged, 0.8% in January, 0.8% in February. Let's see here, medical care commodities, yada, yada, yada. So the main categories I'm seeing a big decrease in, A, we have used cars and trucks, and B, fuel oil. Those are the two that are popping out to me right off the bat, which is good. And that's a good sign. Gas prices have been coming down. We can see, again, used cars and trucks have been coming down, which were in a complete bubble during the pandemic. I mean, I told you guys this story before. My Corolla, I bought it for like 13 grand, something like that. And at one point, it was well above that during the pandemic. Now it's come back to earth. I think it's worth like $8,000 or something like that, $10,000 maybe. But during the pandemic, I could have made a profit on my used car that I bought. It was a 2016, Corolla. I bought it in 2019. And it was up in value. I mean, this stuff is crazy. Now it's finally starting to come back to normal. So what do you guys think? Let me know your thoughts in the comments down below. As always, I'd love to know where your head's at. And if you're finding value in the video, hit that like button. Make sure to subscribe as well to this channel and my second channel, Stas Talks Money. Yes, I have a second channel where we're talking more about personal finance, general finance, money topics. If you guys are interested, make sure to subscribe. Linked right down below. And let's quickly take a look at some stocks here that are moving. Then we'll wrap up the video, guys. So Coinbase is up yet again on the day, up about 8%, up almost $5 a share, and now it is starting to break out. If you guys remember, we outlined this downwards channel, I believe, yesterday. We're starting to break out of that. We're now above the moving averages and at a multi-day high. We're not fully out of the woods yet, but Coinbase is starting to break out, and my alert's at 70, which is right by the high from the beginning of this month. If that's able to break, if we break 70, Coinbase is going to really start to take off. So that's Coinbase, guys, looking pretty decent this morning. AMD is also moving big time. Look at that. It's up 7% on the day. Big move here on AMD. It looks like here they're bringing, what's the catalyst here? It says they're bringing world-class performance of 4th-gen AMD EPYC processors to embedded networking, security, storage, and industrial systems. I have to look deeper into that. But we got that catalyst this morning. We're popping right off that 180 SMA. We took the highs out from last week. Those highs were right about 87, 87.50. We're above that now. We hit over 88 actually earlier in the day. So AMD looks like, number one, we're breaking out. Number two, the inverse head and shoulders is playing out, and we're bouncing off the moving averages. So look, we're approaching a big level of resistance right now. We're not out of the woods yet, guys, but if we break 88, 88.50, above 90, like we talked about yesterday, there could be a lot more upside on AMD. Let's do one more before we wrap up the video, guys. I really wanted to talk about mostly the CPI in this video. We have Pinterest up 5% right now. It's fighting to hold the channel, which it's been holding over the past couple of months. It's fighting to hold it here right at about 23, 24 bucks. My alert, well, I don't even have an alert, but I'll set my alert at 25.50. Let me do that now. Mark is at or above. That's right by the moving averages here. If we're able to break out of that point on the 4-hour chart, the sky's the limit on Pinterest. It could go 27, 27.50, which was the high from earlier this month. If that were to break, we're talking top of the channel, 29, maybe it starts going 30 bucks. So overall, guys, that's it. Those are some stocks I'm looking at, some thoughts that I have right now on the CPI data, kind of a rundown on what ended up coming out this morning. So if you enjoyed the video, hit the like button, make sure to subscribe. Don't forget to get up to 17 stocks for Moomoo using that link down below. Open up an account, you get 1 free share of stock, deposit at least 100 bucks, you get another 6 free shares, and deposit at least 1,000 bucks, you get another 10 free shares of stock, totaling 17 free shares. And don't forget to also check out my Patreon if you want to see me build out my Patreon portfolio. You want to see my charts throughout the day, thoughts throughout the day, and if you want more access one-on-one with me throughout the day, that's on Patreon, link down below. And with that being said, I'll catch you guys in the next one. Peace out.